Today we start with the DXY on our time frame, and that is weekly time frame DXY US dollar index. That is weekly time frame. We have this market structure. Here on top, we have this break of structure. We can call it as liquidity sweep. After that liquidity sweep, you can see price break this low, means it created a shift, have this structure market shift. You can see clearly on weekly time frame, that is clear market shift. After that shifty, it created an impulsive move from that point to this point. You can see clearly. So what next after this? We are supposed to wait retracement to premium zone to sell, to find short position, another short position. On premium zone, we have this unmitigated weekly supply. We have that unmitigated weekly supply. Okay, so price has to raise up until it's reached that area to take another short position. So for now, gold is bullish for counter trend because as analyzed here, you can see on this bottom price swept this sell side liquidity, have this sweep. After liquidity sweep, price created a shifting. You can see this break of structure over here. It is clear market shifted after that downtrend. So we're supposed to trade counter trend on DXY. We are supposed to trade counter trend on DXY. After that shift, you can see price retested this weekly demand. Very clear. Price retested on that weekly demand. And a few last 2 weeks, you can see that candles closed the bullish. Okay. So we are supposed to take a buy from this demand, and our target will be on that top for this counter trend. So that is counter trend. So expecting price will move in form of waves. And then when it reaches this point, can get another impulsive move to downwards. Okay. So expecting next week, USD will be very strong for that continuation. USD will be very strong for that continuation of upward trend. Okay, so another point, you can see we have this proportion here. So there is probability price to retrace to test this area, and then it will raise up until this weekly supply level. So DXY is very strong for DXY will be very strong next week. Okay. Next few weeks, DXY will be strong. So if DXY will be strong, expecting Goldie will drop, Goldie will fall. Goldie will fall when DXY is very strong, Goldie will fall. So we can see Goldie on weekly time frame. That is Goldie on weekly time frame. On weekly time frame, we have this market structure. Lasted 2 weeks, Goldie printed bearish candles. You can see Goldie printed bearish candles, and this price reacted from this fair value gap over here on weekly time frame. There was this fair value gap. So price mitigates this fair value gap over there, and then we expect it may fall until it take out this liquidity, and then later we'll find buys until it take out all-time high over there. Okay. So the bias is bearish for next week. So let's shift your time frame to a lower time frame. On daily time frame, we have this market structure. Daily time frame will have this bearish bearish move, and price retested on this resistance over there. Okay, you can see very clear. So the bias is bearish until now. Bias is bearish, and then here you have this unmitigated FVG. It's not full mitigated, so price may raise up a little bit to mitigate this gap, and then later we'll continue with the bearish move. Okay, Let's shift it to lower time frame, further lower time frame, further lower time frame. Let's see on 4-hour time frame. 4-hour time frame of this market structure. On 4-hour time frame, very crazy market structure. Here you have this break of structure. Have this break of structure, boss break of structure, and price is ranging over there around liquidity zone. So you can't sell direct here around this area. That is liquidity zone because price is ranging on discount level. We're supposed to find sales from premium level. So this price has to create a pullback to this area, and then later we'll find short position to this area. So here you have resistance over there combined with that fair value gap, which created very strong zone. So that resistance, it will be our great key level for finding short position. It's combined with this fair value gap here. So it is very strong zone for short position. Okay. So price swept this sell-side liquidity. After that liquidity sweep, price created what? Price created shifty on lower time frame. Let's see on 1-hour time frame. 1-hour time frame, price created a shifty after liquidity sweep. This break of structure, we can call it as liquidity sweep. So you can't sell directly when price breaks structure. You have to wait to pull back on premium area. You have to wait to pull back to this area, and then later we'll find short position. Okay, you can't sell directly on that liquidity zone. So on 1-hour time frame, 1-hour time frame, you can see this structure created over there. We have another break of structure, liquidity sweep, and then later price break this previous high, which created very sure market shifty. Okay, after creation of that shifty, price printed this demand. You can see price printed this demand, and right now price is ranging on this demand. It created liquidity, that is endorsement. So expect the price will drop later to take out this endorsement, and then we'll find buys. Price will drop to take out that endorsement, and then we'll find buys after the liquidity sweep when price will drop to take out. Let us mark this endorsement first pullback. Price will drop to take out this endorsement, and then later we'll find buys until price it reach this level of this resistance area. Okay. So right now we're supposed to hold short position from this point until price take out this area. So that is counter trend or collective move. Then later I'll find another buy. So that is impulsive move from this point to this point. Expect this it is a pullback. It is a pullback until you take out this endorsement. When you take out that endorsement, wait to reversal pattern created, and then we'll find a buy until price it reach that price level. It is for 40.39. For 40.39. Okay, let's drop to lower time frame. Let's drop to lower time frame if we can find any point of interest. On 30-minute time frame, have this consolidation. There is nothing. On 15-minute time frame, have this market structure. On 15-minute time frame. On 15-minute time frame, on deep discount level, we have this unmitigated demand zone. Okay, if you see it very well, clearly, have this unmitigated demand zone. Above it, you have this endorsement. So let's put it out very clear. Have this endorsement. So price has to take it out. Very simple. Have this endorsement. Price has to take it out. So when price approach this demand, 15-minute demand, let's put it out also. Demand, 15 minutes, 15 minute demand. 15-minute demand. Okay. So when price approach this level, it is mark spotted to this shift also. To understand very well, have this shifty on the discount level, have this 15-minute demand. Let's reduce the size, reduce the size to look professional. Okay, so you have to wait plus to take out that inducement. After that inducement shift, wait confirmation around this 15 minutes demand. When you get the clear confirmation, take a buy, execute a long position. Expect the on Monday price will open with a gap downwards. So after market open, wait a shifty around this 15 minutes demand. After shifty or any kind of confirmation, either it is engulfing or manipulation candle, open bar within this 15-minute candle, and then we can execute a long position until price to reach 46, 46. It is 46.39, 46.39, 46.39. Okay. So when we post wins, make sure we get profit together. When we post win, make sure we win together. When we post win, make sure we win together. Account management is available. Profit share 50-50. Classes mentorship is available, so you can reach. All right. Another pair that is enough for today. Another pair will analyze it on a community. Make sure you stay tuned, stay active on a community. Be active on community. Okay? Share to each other and see you on Monday.